Are you looking for ways to increase your credit score? Well, if that's the case, then you've clicked on the right video. What's going on, guys? Welcome back to the channel. My name is Nav, and if you're new here, we talk about personal finance, investing, entrepreneurship, and a whole lot more. So make sure you guys smash that subscribe button to keep up with the latest content. In this video, I'm gonna share with you guys 5 key tips that will tremendously help you build your credit score in a very short period of time. Make sure you guys stick around till the end of this video, as I'm gonna share with you a bonus tip as well that will pretty much summarize this whole credit score building process. With that being said, the first key tip is to use your credit card for every possible transaction. The more transactions and traffic you have on your credit cards, it shows the banks that you're actually utilizing your credit. This is really important because it actually shows the banks that you're very responsible with their money. You see, the reality of a credit card is you're pretty much using someone else's money. And as long as you're using it but paying it back on time, it's the same concept. You're building trust and you're showing that you're responsible with someone else's money. And when I mean everything, I mean something as simple as going to the convenience store, pumping gas, buying yourself clothes, maybe investing in your business and buying new equipment. Whatever it is, as long as you're using credit cards, this will help you build your credit. And this brings us to the second point, which is actually keeping your credit use less than 30% of your credit limit. Let's just say, for example, you have a $10,000 credit limit. You always want to keep your debt on that limit less than 30%, which means you should never keep your debt more than $3,000 on that $10,000 credit limit. Well, you may ask, well, Nav, if I'm pre-approved for a $10,000 credit limit, why can't I use the whole $10,000? Well, that's not exactly what I mean, but let me explain. When you use more than 30% of your credit limit, it shows the banks that you're really reliant on that limit. It may also show that you're spending more than you're making and that you can't afford buying all of these things with cash or debit instead. And the reason why is because you don't actually want the banks to think that you're reliant on that credit limit. And think about it, you also don't want that debt to carry over to the next month. Not only it'll affect your credit score, but it'll also accumulate very large amounts of interest. Spend as much as you want on your credit card, but only as much as you can afford. As long as you can keep your credit debt less than 30% by the end of the next monthly statement, you're in the safe zone. So it all comes down to not only saving on the interest you're spending every month, but it also shows the banks that you don't actually need to utilize the whole credit limit. You're just using it to accumulate points or to build your credit over time. But it's not that simple, because when you're using someone else's money, you're gonna have to repay it. Which brings us to the next point, is paying your monthly bills on time. When you pay your credit card bills on time, it shows that you're responsible with the bank's money. And this is no different than borrowing $10 from a friend and telling them that you're gonna pay them back next week and you decide not to do so. Now the difference is your friend may not charge you interest, but credit card companies can charge you up to 23% interest depending on the type of card you have. So not only you'll be incurring crazy amounts of interest, it also affects your credit score because you're delaying the payments that you owe to the bank. And if you really think about it, how do you think you would feel if someone owed you thousands of dollars and they didn't pay you back on time? It's the same concept. Using your credit cards and making the monthly payments on time shows that you're a credible human being, and this really just builds your credit portfolio. Not only are you utilizing the real purpose of a credit card, but most cards also come with their bonuses as well. These advantages include rewards, travel points, or even cashback. So just make sure that you check what your credit card offers. That way you can take a full 100% use of it. Now, I'm really hoping that you are making your monthly payments on time, but this actually leads us to the next point, which is making your minimum payments. When your monthly credit card statement comes in and it tells you that you owe an X amount of dollars, you are entitled to pay the minimum payment, which can range anywhere from $10 to $50 depending on the balance that you owe. But do not ever pay the minimum balance. Paying the minimum balance may show the banks that you're right on the edge and that you may not be able to afford your credit card payments. They want to see credibility and financial stability. So if you do have a minimum payment for that monthly balance, just try to pay a little bit more than the minimum payment itself. That way it shows the banks that you can afford to pay more than the minimum payment. You're just deciding not to do so right now because you're being strategic with your funds. And being with a bank is like being in a committed relationship. The more trust you build with them, the more they'll love you. Now, one thing that could really make this a lot easier is to get a free credit report. Now for this, I'd recommend borrowwell.com. This is a website I personally use myself, and it helps you check your credit score for completely free. And the great thing about this website is that it's connected directly to Equifax. Not only that, but having an account, they send you monthly updates on your credit score, whether it's increasing or decreasing, and tips on how to improve your credit score. This is one of the best features that any website for free can offer, and it will definitely help you throughout this journey. Now that you've paid your monthly bills on time and you're making more than your minimum payment, the next thing you want to do is never ask for a credit limit increase. Never. As long as you're following the steps that I'm sharing with you, you'll never actually need to ask for a credit limit increase. They'll just be offered to you. The moment you ask the bank for a credit limit increase, it shows that you are in a risky position and that you require more credit. Banks never want to see you dread for credit. They want to offer it to you because they trust you. But the moment that you ask for more credit, it shows that you're in need of it and that you may be potential risk to them. Banks are not your friends. And the moment that you ask for a credit limit increase, the investigation begins. They're going to run your credit score, they're going to go through all your financial statements, and they're going to make sure that you can afford that credit limit increase. This could potentially damage your credit score by a big amount. So this is something that you really want to avoid. And so what it all comes down to is being patient with your credit. The banks reevaluate your credit bureau every 6 to 12 months, and the pre-approvals will start to roll in. So if you're looking for a credit limit increase, just stay patient. They will eventually come to you. And this leads us to our bonus tip, which is to always accept your pre-approvals. When you accept a pre-approval, you're not running your credit, and it shows that you're a credible person to the banks. And the larger credit limit you have, the more advantages it may come with later on in the future. For example, if you're applying for a mortgage and you've already been qualified for a $40,000 total credit limit on your credit cards, well then it shows that you've already been very credible with your credit cards and that you'll most likely be very credible with your mortgage as well. Now just because you've gotten a credit limit increase does not mean that you can go on a spending spree and spend all the money you want. At the end of the day, guys, just remember, your credit is you. It represents who you are as a person, and it's the only way the banks can evaluate your trust. Your credit score can affect you buying a car, a house, or something as simple as your phone plan. Now, if you missed my previous upload, I actually talked about buying your first home in your 20s, so I'll link that down in the description below, as well as right above me. Make sure you guys check out that video right after this one so you can get a better understanding of what your credit score can actually affect when you're later on buying a home. And just to summarize all the key tips, just remember, you want to make all your purchases with your credit card. You want to make all your monthly payments on time and pay more than the monthly minimum payment. You also want to keep your credit debt less than 30% at all times, and never ever ask for a credit limit increase. Just accept the pre-approvals. And that concludes the 5 tips that can increase your credit score dramatically. If there was any value in the video for you guys, please let me know in the comment section down below. With that being said, thank you so much for watching, and I'll see you guys next time.